In a few hours, at exactly 2 p.m. Eastern, Kevin Warsh announces his first decision as Federal Reserve Chair. The rate decision is already known. 97% probability of no change. Rates stay at 3.50 to 3.75%. But what happens after the announcement, in the dot plot released at the same moment, will either send gold back toward $4,700 or push it down toward $3,800. Today, before the decision lands, we walk through every scenario with exact numbers. So when markets move tonight, you already know why. Welcome to Financial News Daily. Welcome to Financial News Daily, Wednesday, June 17th, 2026. This is FOMC Day, Kevin Warsh's debut as Fed Chair. 3 things today. 1. What the dot plot actually is and why it matters more than the rate. 2. 3 exact scenarios and what each means for gold, stocks, and bonds. 3. What to watch at 2 p.m. Eastern Time and how to act on the result. Most people focus on the rate decision. The rate decision today is not news. 97% of the market already knows rates stay unchanged at 3.5 to 3.75%. That number was decided weeks ago. What is not known, and what will move every asset dramatically, is the dot plot. The dot plot is a chart showing where each Fed policymaker expects interest rates to be at the end of 2026, 2027, and 2028. Each official places one dot. The median of those dots is the signal markets trade on. In March 2026, the last dot plot, the median showed 1 rate cut in 2026. That was the baseline. Since March, inflation hit 4.2%. Jobs came in at 172,000, double forecasts. The Iran war began and ended. Everything has changed. Today's dot plot will show whether the committee moved with the data toward hikes or held the March baseline toward a cut still possible in 2026. That gap between March and today is the most important financial story of the entire month. There is one additional wild card. JP Morgan analysts noted Warsh has, quote, repeatedly expressed skepticism about the usefulness of the dot plot. He may decline to submit his own projection. If he does, that symbolic gesture would signal a fundamentally different Fed than markets have been used to. That alone could move gold $100 in an hour. 3 outcomes, exact reactions. No guessing, just the data. Scenario 1, Dovish dot plot. Median stays at 1 cut in 2026. Probability, 25%. This is the surprise scenario. The market has already priced out cuts. A dot plot showing 1 cut still possible means the Fed is more dovish than the market expected. Gold reaction. Immediate surge toward $4,600 to $4,700. The $4,242 breakout level we identified last week gets cleared in the first 30 minutes. Short squeeze. 49% of retail was bearish going in. Those shorts cover fast and violently. Stocks. S&P 500 up 1.5 to 2%. Rate-sensitive sectors lead. Real estate, utilities, consumer. Dollar weakens. Amplifies gold's move. Bonds rally. 10-year yield falls toward 4.2%. Scenario 2. Neutral dot plot. Cut removed. No hike shown either. Rates projected flat through 2026. Probability, 55%. Most likely. This is the tail risk scenario. If the committee pencils in a September hike, markets reprice immediately and aggressively. Gold reaction. Drops to $3,900 to $4,000. Possible test of 38.16, the bear case floor analysts identified 2 weeks ago. Dollar surges. Real yields spike. Gold faces maximum rate pressure simultaneously. Stocks. Down 2 to 3%. Growth and tech hit hardest. Defense and energy relatively insulated. The Dow could give back 700 to 900 points. Bonds. 10-year yield spikes above 4.7%. Bond prices fall. Short-term treasuries least affected. Long bonds take the biggest hit. You do not need to read the full statement. You do not need to wait for analysis. There is one word that tells you which scenario just happened within the first 2 minutes of the announcement. That word is core. If Warsh uses the word core in his opening statement and acknowledges core CPI at 2.9% is close to the 2% target, he is telling markets, we know this inflation is energy-driven. We are not overreacting to headline numbers. That is scenario 1 or 2. Gold rallies. If Warsh's entire statement focuses only on headline CPI at 4.2% without mentioning core, he is treating this like 2022's demand inflation. That signals the committee is prepared to hike if needed. That is scenario 3. Gold falls. One word, 2 outcomes. Watch for it at 2 p.m. Eastern. It takes approximately 90 seconds from the announcement for the statement to appear on the Fed's website. Gold moves in those 90 seconds. One additional variable entering today's meeting that was not present last week: the Iran peace deal. The formal signing is set for June 19th in Switzerland, 2 days from now. Oil has already fallen to $80 per barrel from $94 just 1 week ago. That 15% oil drop in 7 days has fundamentally changed the inflation outlook the Fed is operating with. If Warsh acknowledges the Iran deal and its expected impact on energy prices, that is additional dovish context. June CPI, released in mid-July, will almost certainly show significant improvement from 4.2%. The Fed knows this. Warsh knows this. The question is whether he says it publicly. If he does, markets will interpret it as the inflation problem may be largely solved by the market itself, without the Fed needing to hike. That is the most bullish possible statement for every risk asset simultaneously.